Gold is soaring. Is inflation next? Oof, that's an interesting one. Haven't read the article. Let's read it. Just came across this as finishing up my last video by Gary Halbert of Halbert Wealth Management. I'm familiar with Gary. He's written a couple things that I follow. He's been around a while. Let's take a look at old Gary's bio here. Let's see what we got. There we go. Okay, they don't really give a. All right, here. President, CEO, Harry. All right, so just, all right, we'll see. But I'm familiar with Gary. All right, so gold prices soared a record high. The question is why? Is bull market and gold signaling much higher inflation? Unemployment fraud rampant due to $600 week bonus. Shocking. Friends and colleagues are increasingly asking what I think about gold's rise to a new record high this summer. And the follow-up question almost always is, does gold surge mean inflation is about to spike? There are numerous factors which can cause the price of gold to rise significantly, but I don't believe inflation fears are the main driver behind gold's recent surge. I don't either. I believe it has much more to do with uncertainty and fear surrounding the coronavirus pandemic. We'll look in the rampant increase in fraud and abuse within the government's unemployment insurance program, which, among other things, offered unemployment workers $600 per week in bonus payments. As I've discussed previously, these weekly payments meant that over 2/3 of the unemployed were making more to stay at home than go back to work. All right, whatever. All right, so probably the most common question I've been asked this year, aside from questions about the economy pandemic, what is causing gold to soar? Gold prices have soared from $1,200 an ounce in late 2018 to a new all-time high of $2,059 on August 6th. Well, I tell you, don't forget, man, the S&P 500 is up 55% from March 23rd. All right, so, I mean, oh, hey. Remember, when you hear Pablo, you got to Pablo. Pablo makes us known. You got to paw the like button. All right, so anyway, gold is up 30% this year, making it one of the best performing asset classes. But again, since March 23rd, the S&P 500 is up 55%. Now the S&P 500 fell 35% in the interim from February 14th to March 23rd, but it's still up for the year. All right, so let's not overlook that. I'm not comparing the two. I mean, I've argued that you should have some gold, absolutely, since day one. But if it's kind of like the climate change frauds. We're going to start the climate change numbers at the end of 1979, which is after the drop of the global cooling scare, and then it went up since. So if you started in 1979, you can show that the global is warming like crazy. Oh, all right, and then if you get rid of the little ice age and the medieval warm period and all that, so it's just, I don't know. I think just look at this one period of time. Let's see. People have been flocking to gold because of fears over the coronavirus and unprecedented actions of governments and central banks around the world to head off in an economic depression. The U.S. government will run a record large federal budget of at least 3.7 deficit of at least 3 points. Record large federal budget. I'm assuming he's saying deficit. Yeah. Oh, there he missed a deficit. 3.7 trillion deficit in 2020, which almost doubles the 1.9 trillion that we had during the Great Recession. Meanwhile, the Federal Reserve has added more than $3 trillion to its balance sheet this year, sending it to an unheard of $7.2 trillion. And no sign the Fed's done yet. Of course, the Fed slashed short-term interest rates to near zero earlier this year and suggested it could keep rates at zero until about 2022. The combination of unprecedented money printing and near zero low interest rates has pushed the U.S. dollar sharply lower this year and is driving gold prices higher. Geopolitics have been a factor as well. But there are also other contributing factors to gold's rise. More and more forecasters are now predicting gold will go even higher still. Goldman Sachs recently upped its forecast to 2,300. Bank of America said it could go to 3,000 next year. Okay. There's no doubt that many investors who piled into gold have done so because they're convinced the yellow metals spike to record highs is a sign that rising inflation is finally about to pay us a visit. And that could prove true. However, the markets, which usually warn us about rising inflation, are signaling just the opposite this year. Without getting too far in the weeds, the TIPS, Treasury Inflated Protected Securities, show inflation below 1% for the next 5 years and below 1.5% for the next decade. Exactly. That's why I look at it. Look at the TIPS, man. I just look at the 10-year, but look at the TIPS too. The inflation options market, usually referred to as swaps, also allow us to look at the odds of inflation rising just ahead. The latest data from the Minneapolis Fed show only a 5% chance of inflation averaging more than 3% over the next 5 years, meaning a 95% chance it won't rise that level. The probability price into the options of inflation averaging less than 1% was 52%, down from a peak of 85% in March. So that's still quite high. So the probability of inflation averaging less than 1% over the period of 5 years was 52%. So no one's expecting huge inflation in the options markets or the Treasury inflated protection securities, which is where people got their money. That's where they're putting their money online. I just look at the 10-year. I mean, my goodness, no. If you expected inflation to be that high, no one's going to buy the 10-year. Now, you can make the argument that the government is buying the 10-year. Okay, but are you saying the government is the only person or the only group that's buying the 10-year Treasury? I don't believe it. So what conclusions can we draw? While the recent spike in gold prices could be a sign that higher inflation is on the way, it could also be because of numerous other factors. At this point, the surge in gold demand is primarily the result of the COVID-19 pandemic. A close second is the fact that traditional inflation, such as the Treasury tips yield, suggests inflation will remain below 1% for at least the next 5 years. Plus, the inflation markets, which are priced for similar or low inflation at least the same period. The bottom line is that if we are headed for a sharp increase in inflation, as many gold enthusiasts seem to believe, it will be one of the greatest market misses in history. My advice, I would not be chasing gold at record levels today. It may go higher. But I believe that train has left the station. Yeah, I agree. If gold is a permanent part of your portfolio, as it is mine, says Gary, then hold on to it. But I would not be a first-time gold buyer after this massive run. All right, so that's a good article, man. Big fan. I 100% agree. 100%. I still think you should own some gold, even if you have to buy it at 2,000. I don't care. You should have old gold, the coins, the bullion. You should have not gold miners, the actual gold. You absolutely should have some for sure. And it seems like Gary thinks. He says you shouldn't buy it because it's traded too high. I don't agree with that at all. I think you buy it and you hold it and you never let go. Yeah, love to hear your comments on that. Don't forget to paw the like button. All right, we'll see you.